So hi, I'm Jaruthassanakul, CEO and co-founder of Fraction, a platform that will make everyone equal again. So now, unlike some of the ideas that you're going to hear today where you may not be directly usable by you, well, get your ears out because this one, all of you will need it. Today, 10% of people owns 80% of the wealth, and this gap is only getting larger. The rich are getting richer and the poor, actually everyone else is getting poorer. Why? Because the rich have access to investment opportunities that the rest of us just simply don't. If you have millions, you can invest in businesses, you can be an LP of VCs here, or you can park your money in property like many are doing to beat inflation. But if you don't have millions to start and only have your monthly salary, what are your options? Let me show you some interesting figures here. Last year, 50 billion baht of unsecured, mostly junk rated, yielding between 3 to 5% bonds was sold out like hotcakes. This is in the context that inflation is running at 8%. Or in other words, if you invest in any of these bonds, you are simply burning your money away. Why? Well, I guess it's better than the 1% that you're getting in bank deposits, where if you park your money there in 2005, you are 25% poorer today in real terms. Why do we do it? Are we all stupid? I don't think we are. But simply, we just don't have any other options. With 10,000, 100,000 baht, we simply just can't do what the wealthy can do. We are locked out of wealth creation. You may say the capital market is the answer, where smaller proportion of investment is possible. Well, it's not. I spent almost 20 years in New York Investment Bank running M&A, and I don't buy a single stock right now. Why? Because as retail investors, and despite what you think, you simply have very little understanding of companies' valuation and only just guessing and following. That's why 90% of people actually lose money in stock markets, and that's actually fact. And that is about the same odds as going to a casino. Don't even mention crypto. This is why, and you can see the discrimination. People with large capital just gets a better deal. Fraction will change all of that. A world-first end-to-end fractional ownership platform for simple, understandable real-world assets, powered by blockchain and NFT technology. We simply turn a house, a boat, a villa, collectibles, anything, into a mini publicly listed company where you can now buy a fraction of right here, right now on your phone. So with millions or 500 to start, you can all invest in the same thing. Real estate is already live on the platform, on our platform right now. With not needing 30 million to start, you can buy a fraction of this Baba Villa or this asset-wise condo next to Summerside University right here from your phone, from your seat here. In fact, last week, KFTU, that last one, paid its first dividend directly to fraction holders' wallets, not even through banks. Governance is also key on our platform, where votings, transactions, dividends, all written on chain. Not only investment, Fraction also democratizes access to public capital. Why do you need banks for home loans? Fraction is effectively an internet-scale peer-to-peer lending platform. Now you can be the bank. 2 weeks ago, we launched our rent-to-own model where the banks are not in the picture for a home loan, and it was sold out in minutes right on stage while I was talking. Instead of you putting your money with the banks, earning 1%, the bank using that money to lend it out at 7%, you can now lend it directly to the home buyer, where at 6%, at 85% LVR, with the security of the asset on hand, I can assure you there's not a single product like that out there with that risk return profile because the banks have all of it. It's a no-brainer. Fraction bridges the DeFi economy with traditional finance, and we can do things that the current capital markets can't do, like linking utility to live ownership. If you own a fraction of the Baba Villa that I showed you earlier, you can also use your entitlements to stay there too while collecting the yields. Applications are endless, and these asset classes, new asset classes, are being added to our platform all the time. It is massively scalable and it's mass market, and it is here right now. We are also fully SEC licensed. If you hear about anything in this space where it's coming soon or just have a video to show for it, simply too late and just way behind.
Okay, and now time's up.
We are backed by some of the leading VCs in the region and would love you to join us. With Fraction, what we say is you don't have to be born rich to make it anymore. It is exclusively for everyone. Thank you.
Okay, and right now time for question and answer.
And you can download it right now.
Okay, so
Any
we
question,
have
Crab, bio
only
English
5
is
minutes
fine.
for question also.
Thank you so much for the presentation. So so the first question would be, what do you see are the risks associated with this? The risk? Yes.
Clearly, the association with crypto is a risk for us. I think we're certainly not a crypto company. We are far from it. We do utilize NFT and blockchain technology, but I don't really even mention that because we're all about actually fixing pain points, right? Now, so the adoption of getting people to actually understanding these things is actually probably something that I think is a hurdle that we'll have to get through at the start. But we're trying to make it in such a way that the product is the most simple, easily understandable thing that we can. And you won't see us doing any structured product, nothing that I used to do in my banking days. It's going to be very simple. If you own a fraction of it, you own part of it. And that's all you need to understand.
Hi, thanks for the pitch, Pio. And I think some of the asset classes that you showed, even the middle class don't have access to today, right? So I think the concept is great. I just want to understand, out of curiosity, what's kind of the biggest challenge or the biggest bottleneck for you right now? Is it more the supply of assets, demand from the investors, or just navigating through the regulations and legal challenges?
Look, I think in no particular order, but the supply of the assets is actually probably the easiest because, frankly, everything will need to be digitized. And I don't say that lightly. I mean, the word digitized means that instead of writing it down on pen and paper, it needs to be on some digital form. So supply of asset is quite easy. Now, getting investors on board is slightly harder. From the perspective that I said earlier in terms of getting education, that people to trust these sort of things because it's new. Having said that, we are not looking to to have millions of users, and we don't need that. I mean, there are 2 million accounts on the Thai Stock Exchange, 700,000 active accounts. Even just 10% of that, and we're not actually competing with them. We're not asking you to liquidate all your capital markets portfolio and put your money in here. We're actually just saying you can diversify. If you should put, say, 10% of your portfolio in property. Now, if the average price of property is 10 million, right? It means that you must have 100 million port. Who has 100 million? So this is actually just a way for people to diversify as well into real hard assets.
Just a quick follow-up on that. Who manages the property or the assets on your
So it's just like a public company, actually. So the owner, the fraction holders are the owners, just like shareholders are two companies. So fraction holders, appoint the management, just like appointing a CEO, CFO, management. So if it's property, it's a property manager. So the property manager manages the property. If it's yacht, it's sort of similar people, but they don't call property manager. If it's other assets, it's the same thing.
Okay. So it's the investment on the asset, and who assess like the value of the asset?
Value?
Yeah. If I invest in the asset, like fraction of the house, and how can I know that the valuation is increased or something like that?
Okay. All right. There's a few different things in this question where I actually like to say. Well, firstly, the price of the fraction is purely driven by market. So whatever the willing seller and willing buyer, right? Now, yes, there is information about if it's a property, we do a yearly valuation, but that doesn't mean that it actually links to the actual price that the fraction of those things are trading at. But then I actually want to say something a little bit more. Speculation in the stock market is actually something that I think that needs to be addressed. Why is there speculation? Because people don't actually understand the value. People don't know whether SCB should be 37 baht or 80 baht, which means that when the brokers are pushing it, or when people are trying to speculate these things, people just simply believe. But if it's things that people already understand, for example, if it's a house in your soil, and you know that it goes for ตารางวาละ 200,000 and the house is worth 10 million, which means that overall it's about 30 million. If I spend the next 5 days trying to say to you that it's worth 150, you won't believe me because you already know. And that's actually why, that's the key reason I want to dumb down the capital markets. I don't see any guys in here actually should be in the capital markets. I mean, I used to have hundreds of analysts working for me. I used to have a whole trading team working for me, and all the information. As retail investors, you just can't beat them.